For decades, the standard operating model for GCC businesses was built on isolation. Finance, HR, and operations functioned as separate units, rarely sharing real-time data. This era relied on disconnected spreadsheets, manual fixed asset tracking, and a heavy dependence on year-end accounting reconciliations. This fragmented approach was manageable when primary requirements were basic VAT filings and monthly payroll runs. However, these legacy structures cannot support the rigorous demands of modern, real-time legal compliance. Corporate tax and labor regulations have moved beyond year-end paperwork. They are now strict daily operational deadlines that require constant accuracy. These pressures affect every SME, contractor, and manufacturer in the region, making back-office efficiency a requirement for survival. Managing records across disconnected accounting packages creates gaps in data that lead directly to filing penalties. In the current GCC regulatory environment, maintaining a disconnected back office creates high-cost legal exposure for the entire business. Under the UAE Federal Tax Authority's rules, companies have exactly 9 months from the end of their financial year to file their corporate tax return. In the UAE, the tax return and the actual cash payment are legally required on the exact same day. When fixed asset registers sit in offline files or ledgers require late manual corrections, vital tax calculations are pushed to the very end of the window. A single late adjustment in an isolated spreadsheet can instantly change the required payment, stripping the business of its forecasted cash reserves. Tax compliance failures are the result of weak data discipline months before the deadline arrives. HR operations face similar risks. Many businesses still rely on verbal pay raises or informal email approvals that lack a formal audit trail. The UAE's wage protection system requires every salary adjustment to be formally documented and reconciled immediately. If HR updates a file but the payroll system isn't synced, the company transmits conflicting data to the authorities, resulting in immediate fines. Beyond the legal risk, unpredictable payroll caused by disconnected systems damages employee trust and retention. Modern HR actions are externally audited financial events, requiring full integration with the company's accounting core. These risks compounding for regional groups, managing entities in both the UAE and Saudi Arabia. Often, the UAE books close on time, while the KSA branch delays the group report due to offline adjustments and manual local reconciliations. Centralized finance teams cannot meet local legal deadlines with real-time visibility into branch-level ledgers. Treating multi-market compliance as a series of local administrative tasks leads to missed filings and expensive penalties across the GCC. Effective compliance begins by moving away from disconnected files and into an automated ERP environment where data is captured at the source. This means accounting, HR, payroll, and fixed assets all feed into a single, continuous, and auditable record. Real-time integration prevents the panic of year-end reconciliations and ensures the business is always ready for a tax or labor audit. Establishing a unified data architecture ensures that compliance remains a controlled, daily business routine. Hinawi ERP provides this integrated platform, built specifically for the unique regulatory landscape of the UAE and GCC. The system natively handles regional requirements like WPS payroll, VAT, and e-invoicing, keeping your departments connected and compliant. True compliance is the natural byproduct of a disciplined, unified business system. Connect with our team today and see how Hinawi ERP can unify your business operations.